Although, Ben, I mean, the way you set it up in terms of this undisprovable idea that the hyperscalers may have to throttle back on spending, it kind of counters the idea that Nvidia was shelter from the troubles of the hyperscalers or the burdens on them or the worse earnings, kind of quality of those companies, because Nvidia down the road is going to be subject to whatever vulnerabilities show up in those business models.
Well, potentially. I mean, the thing about Nvidia that's actually good is they have exposure to Anthropic now and OpenAI as well. If they happen to win and the hyperscalers lose, they will get a lot of that exposure. Obviously, sovereign AI is in the early innings. Governments have to invest in this. They can't let all these LLMs and whatever, run their lives, especially certain nations. So I think that I think Nvidia, obviously has a lot of other potential levers. I think, though, in general it's very hard right now for the buy side to, in their mental DCF, underwrite the cash flows for Nvidia's customers in the 2030s. Nobody knows. And so I think that as we figure out what's happening with agents, though, it's so explosive what we've seen since the launch of OpenClaw. Like, I know it sounds like hyperbole sometimes when Jensen says it, but the amount of compute that these agents are going to consume, and the TAM is really labor, guys. So a lot of people say, oh, the TAM is really this CapEx. The TAM is labor, and it's really scary. And Jensen has to thread a needle on that, of course. But like, if you look at all the labor and the trillions of labor that can transfer to software and tokens, NVIDIA is still going to benefit from that. Now, the question is, how do we get from point A to point B along the way? And there's a lot of doubt. But if you look at the TAM of labor and how much has to shift to NVIDIA's market cap, it's still pretty overwhelmingly good.
Right. Well, it's interesting how you put that in terms of him threading the needle and not saying that we're going to have a jobs apocalypse. Something else he seemed to do, and I'm curious to get your point. I know you don't cover a lot of software companies or software related, but you cover a few. He's basically defending and saying, no, they're not going to be impacted. In fact, their business is going to be just fine. Do you agree with that?
Sort of. No, I don't really agree with that. I think that if you parse his words, look, we've been saying AI could eat software for a couple of years now, and we've been on your network, and we're obviously seeing a dead cat bounce right now, and that's understandable because everybody had the same trades on for the near term. But I think that if you really think about it, he's saying the tools won't go away, like Cadence and Synopsys, tools won't go away. But if you thread the needle on what he's saying software moves to tokens, okay? Software moving to tokens means we're moving to a consumption model, not a seat model. Are you telling me that all these SaaS guys are going to make that transition to consumption and outcomes without missing a few quarters? Are you kidding me? So this is a really tough transition for the SaaS guys as the economics go to consumption that's going up and to the right and towards the semis guys. But,
Finally,
but
Ben,
maybe things are oversold near term.
Yeah. We'll talk some memory next time, and maybe we get something out of GTC that moves some of the memory names as well. Thanks for the help today. Important story to understand. Ben Reitzes.
Yeah. Thanks, guys.